The world's biggest election starts today with around 815 million people registered to vote over the next 5 weeks. Now, Hindu nationalist opposition candidate Narendra Modi holds a strong lead with promises of economic revival and jobs. I'm joined on the line by Samiran Chakraborty, Chief Economist at Standard Chartered in Mumbai. So how do you feel about the BJP's pledges, and do you think they will fall short of a parliamentary majority?
BJP is asking for votes on the plank of good governance and development. They want to stimulate the growth in the economy, which has been sagging for the last 7 quarters. Their primary approach towards growth is through more infrastructure development and focusing on manufacturing activities. On the party manifesto looks at several strategies to get these 2 sectors moving. So obviously there is a hope in the market that economic growth will revive post BJP's, if BJP is elected to power. However, there are several challenges in front of BJP. Primarily on a macro front, the challenge is that we have an economy where there's very high corporate sector leverage. The banking sector NPA ratios are very high and capacity utilization is very low. So kickstarting the investment cycle might take time. Also, as you asked me, the challenge is that the BJP-led NDA might just fall short of the majority mark, as the opinion polls are suggesting. In that case, the political situation might remain quite divisive even after the elections, making BJP's task that much difficult. So it's on hope that we live in that there will be some changes post BJP's election. But at this moment, it's very difficult to say how successful BJP will be in making things turn around.
Modi is expected to push for closer business and trade relations with China. So can you walk us through the main challenges and developments for trade this year?
On the trade balance side, India has done remarkable progress in the last year or so, where the monthly trade deficit, which used to hover more than $20 billion, has now come down to less than $10 billion. Now, in this context, what is important to understand is that the government had put in significant curbs on gold imports middle of last year. So a large part of this reduction in trade deficit is just on the back of that. Particularly with respect to China, India runs a very large trade deficit. So clearly there is always a pressure on every government to promote more exports towards China and limit imports from China as much as possible. This is a slow process. So in my view, it will take a relatively longer period of time for this trade gap to be narrowed. In the meanwhile, India will have to focus on more productive exports, and at that point should also look into having the right balance of productivity and from the currency side to support this export growth.
Now, earlier you mentioned manufacturing. In February, India posted the strongest manufacturing expansion in a year. However, it seemed to have slowed in March. So what were the main reasons for this?
Well, to be honest, the manufacturing growth for almost a year now has been practically flat with very minor changes. So it would probably be right to say that there are still significant challenges in manufacturing growth. Part of this is simply to do with election-related uncertainty, which one can expect to get resolved in about a month or so. But till the election results are out, there is lack of investment demand. And with investment slowing down over the last 2 years, it's consumer demand which has also got impacted and is getting reflected now in consumer durables data. Also, the reason why in the first quarter of this year manufacturing has slowed down is because export growth has slumped from double digits to minus. And that's something which is having a drag on manufacturing growth as well.
Now, are you expecting to see volatility with the rupee and in the markets over the election period? And in the midterm, would you be bullish on the rupee?
Well, election presents a digital risk for the markets. So if the outcome is of a stable, cohesive government which promotes a growth mandate, then it should be good for the markets. In the past, the equity market reaction to unexpected election outcomes have been much more than the currency market reaction. In fact, in the last 5 elections, the maximum movement over a 1-month period on the currency has just been about 3%. However, since today the market is already positioning for BJP-led NDA government to come into power, if for some reason the opinion polls are wrong and we get a different outcome, then possibly we could see more volatility around the election time. And if the BJP-led government is elected to power and there is some scope for economic recovery, then I would expect more money to be flowing into India. And that's why over the medium term we would remain bullish on rupee on the hope of a stable government.
Thank you very much. Well, viewers, do stay tuned as we have plenty more economic updates heading your way.